Hello. Hello, everyone. This is Charlie Tian. I'm the founder and CEO of GuruFocus. I'm very glad to be in this meeting again, to see you again. And I know maybe we're a little bit early, 1 to 2 minutes early, but let me know where you are. I'm in Plano, Texas, and the weather is actually great. Now it's best season, and it's very comfortable outside. Although sometimes it's still hot under the sun. But let me know where you are, and I always love to hear from you. And also, as always, whenever you have questions, and feel free to ask while I talk and tap in the conversation area, chat area in YouTube, and I will always come to the questions, and I will do my best to answer your questions as usual. Okay. I do see some familiar names. Thank you, everyone. Brian from Oregon, Fleet. Okay, Bruce. I'm getting lots of high valuation, and that's why I'm thinking I want to share the market valuation with you. And you can see that you should be able to see my screen here. It's my homepage. My homepage might be different from yours because this page can be fully customized. If you don't know, it's very easy to do it. Just move around different components in this screen. In this, it's called that we call dashboard, and you will be able to customize it to whatever you want. And you can also add widgets here, but just by clicking add widgets and to add the indicators that are not on the home page. You can create multiple views, actually, also. There's a new dashboard button here. If you click on that, you can create multiple views so that you can switch from here. And I have only one view, I think. Okay, I may have others, but I don't really use them. They're just they were created for testing purpose. Okay, James, can you set the screen to overall to complete screen, because I see in YouTube the screen is not complete. There's some wiser information there. Yeah. Okay, that's the way of doing it. Okay, great, thank you. Yeah, I see lots of names. Thank you very much. And I want to talk a little bit about market valuation. Actually, we have a market valuation module here. If you expand it, you can see that this market valuation is based on GF value. And this GF value screen, this is the GF value of SP500 index. And this blue line here is the SP500 index, and the black line is what we think the fair valuation is. And so currently the market is about close to little bit less than 20% overvalued. So we think that, yeah, market overvalued. If you look at this chart historically, whenever it's this kind of valuation, it's usually followed by a correction. I don't want to predict the market, but the valuation is high. Please keep that in mind. We can also see the valuation from the Buffett indicators here. The Buffett indicator tells us the market is significantly overvalued, and the future return is likely to be just 0.2% a year for the next 8 years. So the valuation is really high. The future return isn't very promising. That's where we are with the market. But the market is not balanced, and if you want to know which sectors, which industry is relatively undervalued, yeah, please take a look at our global industry overview page here. The global industry overview page will tell you the relative valuations of different sectors, different industries. If we, for instance, just look at the U.S., and it shows you the U.S. different sector performance, year-to-date performance of different sectors and different market caps. And also, actually, you can see that by industry now. This is something we added. You can see it by industry. The industry performance, different industries. If we look at the year-to-date performance, among large caps. Okay, yeah, maybe I should click on among. This is sorted among large caps. You can see that the best performing sector. If I just click on this, okay, the best performing year-to-date is actually utilities. Oh, it's unbelievable in utility. I know some company, electricity company went up multiple times this year. The reason might be because the AI driven, also AI is using lots of electricity. This is quite unexpected, actually. But if you click on this, I think you'll be able to see what companies were doing so well this year. Yeah, the utilities. And these are the utility companies. If you look at the price performance year to date here, if you look at price performance here, if I just click on it to display the total return, and yeah, that's the company Vistra Corp. It's electricity based right where I am, based in Dallas, and it's up 229% this year. Constellation Energy, I think it's a California utility, is up 130%. And NRG Energy is up 83%. So it's quite unexpected. The utility company did really well. The furnishing company, healthcare providers, the industry that did poorly, okay, cars and beverages, alcoholic beverages, steel industries. So yeah, you can take a look at this, and some industries did really well, but because they did well, their valuations can be high. So maybe you will be able to find the ones that are relatively undervalued. So I'm back to where the industry performance page is. And now you can see here different industries, their performance, their valuation based on PE, based on price book, price to sales, lots of ratios here. You can find the ones that might work for you. That's a valuation. Of course, the valuation can also be measured by different parameters, but different indicators like the Shiller P. This is a cyclically adjusted P ratio. And you can see that it's about 36.9% higher than the 20-year average. So this page it's very high. It's the valuation is very high, and can see that the future return will be low. Somehow this page, okay, yeah, that's where we are. That's where the valuation is. So let me look at the questions as usual. Please feel free to ask me questions. I'll get to the questions before I after I finish the general talk here. Thank you, Helen. Thank you. Sorry, I missed your message. Brainstorm more. Okay, I'll get to the questions. But a few things I want to talk about. First is the AI function. We have added an AI tool here on the stock page. If you look at this here on the bottom right side, we add an AI button here. And you can click on that button. If I click on this button, you can ask questions about the stocks you are looking at. For instance, NVIDIA. Of course, everyone talk about NVIDIA. Let's replace it with another company. We don't want to talk about NVIDIA. Okay, SNPS. This is a company that I own for a long time. It's a semiconductor. It's a software company, but it's a I think it's a chip design. It does chip designs, and it went up. I think this year. Okay, this year and it didn't do really well. Only this year it's up only about 1%. But last 5 years, I think it did very well. This year it has some correction. Let's ask questions. I never tried this before, so let's ask. What is the valuation of SNPS? I'm just asking a general question here, and let's see how it answers. The data actually is from the transcripts and the reports, the findings, and also the data we have, and the conference call transcripts. Okay, so it answers quite very detailed. It tells us the current price, the GF value, and then different ratios, PE, PS, PB ratios, and also revenue per share. And then it says conclusion. Conclusion saying that Synopsis is currently fair valued. Okay, it tells us this company is fair valued. So yeah, please read through this, and I think it can be quite helpful. Let me ask another question. What are the risks of investing in SNPS? Let's see how it answers. It does. I think it. I'm not. I don't think we should totally rely on it, but it may tell us something that we don't know. Okay. So the risks of different risks investing in this company: market economic risk, industry risk, company specific risk, and financial risk. Okay, financial risk. It tells us the P ratio, high valuation multiples, P ratio, and price to free cash flow ratio, 78. High valuations, regulatory risks, and geopolitical risks. It's actually quite complete. And I think reading this is useful. And it may help you to avoid some mistakes when you do that. I think this is quite useful. Yeah, it's here. It's an AI button here. It works for every stock. That's something we're still working on. It's a new feature, and it's also linked under tools under GuruAI here. And you can ask generic questions. You can ask company specific questions, and give us feedback whenever you find something we can improve. That's GuruAI, a new feature we released. Another thing I want to mention is that all-in-one screener, although we have worked, have this all-in-one screener for many years, but it seems like sometimes our users still don't know some basic functions about the all-in-one screener. And one function is a search function. You can always search for filters you're looking for. Today, someone's asking about PB ratio, price to book ratio. Just tap here. I think if you tap price to book, price to tangible book. Okay, so the regular price to book ratio does not appear. Price to book, yeah. If you tap it, it should appear. If I want price to book less than 1, between 0.6 and 1, so I should I should already screen from here. And again, if I just want, that's actually very useful. If I just want the stocks from SP 500 and from Nasdaq, I just want all the stocks that are within SP 500 and Nasdaq index, and with a PB ratio between 0.6 and 1. Let's see. Okay, we have only actually 2 companies that satisfy the needs. One is Intel, and the other is a Kraft Heinz. With these 2 companies that most people are familiar with, actually, Intel has been doing very poorly this year. And let's see. If I just add the YTD performance here, Intel is down more than 50% this year. Kraft Heinz is holding Warren Buffett. It has not been doing really well either. I'm not sure if he sold it already. I don't think, but I think he still owns at least some of them. And yeah, it has been doing poorly as well. So with these two filters, it's we don't get lots of stocks. If I relax this, if I just if I remove the requirement here, companies with holdings between holdings, I think the setting now I have here is that it's okay. It's in both. It's an intersection in both Nasdaq and SP 500. So my filter was in both SP 500 and the Nasdaq. If I want a union, so it's either in SP 500 and in Nasdaq. If I just want a union, if I set the same screen, I think I should be able to get more companies here. Okay, now this time I got 13 companies, and 13 companies with price book ratio between 0.6 and 1. And okay, we got lots of financial companies, banks, Citigroup, Capital One. We also got Ford and GM, the car companies. They are usually not are traded at low valuation, and also Investco. Okay, lots of Ben Franklin Resources, the mutual fund company. So we got lots of financial companies if we do this kind of search. So that's a search for filter function. Yeah, please always use it. If you don't know where a filter is, you can always search with the search for filter function. Another function is that people, I got a few requests from our users. They were asking where, if you want to filter for like something that keep growing, like revenue or companies' revenue keep growing year over year or quarter over quarter. That's actually how to do that. That's actually, we have a plus sign here. If you look at this plus sign, and with this plus sign, we recently added the quarter over quarter and grow year over year growth function. For instance, if we want a company that since last okay 2001 Q4 to this year Q4, we're not there yet, grow year over year for at least 5% in revenue, and it should already filtered here the results. Okay, there's no data. Okay, there's no companies. Okay, because I think maybe because we're selecting the Q4. If I just select Q1 and okay, yeah, now we got some companies. These companies, they have been growing over the last few years. For first quarter of the year, and year over year for at least 5% growth. And that's okay. Microsoft, Google, very familiar name, Broadcom, Tesla. If I change it, it's quarterly, but grow quarter over quarter, every quarter. So every quarter it needs to grow 5%. That's my requirement. Let's see. Okay, we still get some companies, I think. Okay, let me make sure that it's working properly. If I just quarterly, I select quarterly, and from 2023 Q1 to this year, grow quarter over quarter for at least 5%. And now let's see what companies we got. So it's filtering. Okay, we got these companies. We got ServiceNow and MELI. ServiceNow. All these companies over the last 5 quarters, they have been growing quarter over quarter, every quarter, for at least 5%. So every quarter grow 5%. So MELI, this is a company I own. It's like Amazon of South America. It actually does more than Amazon. It also does payment, besides online online marketing, online retail, and the stock has been doing really well. And yeah, that's by the way, if you want to show other ratios here, you just click on this little eye here, click on it, make it green color, it will display here. And we also recently added a note function, a note for the screener. You can see that there's a note column here. You can move it around. You can write notes here, and this note, once you write it, it will also appear in your portfolios. If you own this stock in certain portfolios, for instance, if I just click on here, I own this. I just click on this and save it. It will appear next time if I come to this page, and this note will show it. It will show, and we'll also add it to the charts, to interact charts. We're working on it. For instance, if we come to interact charts here, once the notes will also show here on the chart where I added, it shows the notes I have here. If I if I have a notes, we'll also be able to add alerts and notes here. That's some requests from our users. Okay, let me get to the questions from the very beginning. Let me see. Okay, we have a Peter Profi asking, as a familiar with, you show quickest, easiest way to find cash burn, stock-based compensation, and the share outstanding. Okay, yeah, the easiest way to find all those is in 30-year financial page. 30-year financial, if you come to this 30-year financials tab, the shares outstanding in this page is actually has so much data here. It has all the financial data you need. If you want to shares outstanding, just search for shares here. Okay, I think we have a search function here also. Do we have it? We should have it somewhere. But you can always search on page. Just search shares outstanding. Shares outstanding. Shares outstanding here. Click on that. It will show you the chart of shares outstanding of this company. And then the cash burn, I think you're talking about the cash flow. So if you come to a cash flow statement, you can see the cash flow from operations and cash flow from investing and the free cash flow here. Free cash flow. This I'm showing the company, which is MELI. Free cash flow here, and here I think that's a cash burn you're talking about. And also you want stock-based compensation. Stock-based compensation, the information we have is mostly from issuers stock. We actually I don't think we have pure stock-based compensation here. But you can get some idea from the issuance of stock or repurchase of stock. That's a cash flow. It's under the cash flow statement portion of the website of the 30-year financial data. If you want detailed information, I think you can find it in the reports, annual reports, which is actually very not hard to find, which you can easily go to SEC filings here. If we click on SEC filings, you can go to 10Q, 10K, and search for the stock-based compensation. It's actually, and it's not hard. You also, if I just search here, stock-based. The page seems like my browser is frozen here, but it's not hard. It's easy to find. But in the 30-year financial page, you can find most of the information and most of the data you want. Okay, let me go down the questions. Thank you everyone. Thank you. Okay, Brainstorm is asking FTNT. I think someone asked about this stuff before. Fortinet is I think it's a cloud computing. Oh, it's a security-based business. I think security. Yeah, cybersecurity vendor. Yeah. Okay. So let's see what's the question. Let me go back to the top. So what's the question? The question is the GF score is 100. Yeah, it does. It does have a GF score of 100. And is it a perfect investment? I think by our study has found that at least when GF score is high, the chance of outperforming the market is high. So I cannot tell you if it's a perfect investment or not. And no stock will become perfect. It's just a relative. So relatively, seems like it's a good investment right now. It has good profitability. Rank valuation is reasonable, even modestly undervalued. And so momentum is good, financial strength is good. So seems to be pretty good. The company is growing fast, growing consistently also. So seems to be good. The shares outstanding is declining. That means company has been buying back. That's always a good thing. The buying back, company bought back for 4% or 5% in 2020 and 3.5% in 2022, and also 23 to 2.62%. So company is rewarding investors and buying back stock because they have been buying back stock, their equity become negative. Oh, but it's okay if they have good cash flow and they have lots of cash. So that's I think things does look pretty good. The profit margin is 21%. Let me do a final check. We do see one warning sign here, which says, okay, this inventory is being building up. That's a warning sign. I don't know. I didn't check first, but do take a look. What's going on with this inventory? But most of the things with this company looks quite positive. That's what I see. Okay, let me go down more. Why AEHR is a value trap? AEHR, let's take a look. Okay, AEHR test system. I don't know what this company does. Let me take a look. The test system, burn-in, test logic, optical memory integrated circuits. Okay, it's a test. Okay, it's a test equipment company. It looks like, and we tell you it's a possible value trap. Okay, I think one value trap is because it's finish M score. It's very low and very high actually. Finish M score is suggesting the company might be manipulating its accounting. That's what this indicator indicates. That's why we set it as a possible value trap, I think. Yeah, do double check that because this indicator, if you click on this, it will show you how the indicator is calculated based on which parameters. This company seems to have really high finish M score, and you want to double check. I'm not saying it's 100% as we always say when we tell you it's a value trap. It doesn't mean that you cannot invest in it, but always make sure that you know everything that's going on. Okay. We publish committed trades data. We don't publish that data. I don't think we have that data. How wide is the net you cast for analyst ratings? And we drill down into who the analysts are. No, we license this analyst data. We cannot drill down to who the analysts are and the reports. We cannot. We only have a general analyst rating and how many analysts are following each stock. Okay, what do I think of Professor Awar's Damodaran's criticism of value investing? I don't know what he said about value investing. I didn't follow him that much. I know he's very academic. His evaluation model is really quite complex. And I didn't follow him very much. Regarding to value investing, I think some people define value investing has different definitions for different people. To me, I would follow what Charlie Munger said. He said that all investing is value investing. So if you make your decisions based on fundamentals and based on facts, and you make well thought decisions, it's value investing. So Charlie Munger said that all investing is value investing. Otherwise, it's not investing. It's speculation. So that's what I think too. Trying hard is asking, is predictability rank incorporated into GF score? They're all related. Predictability rank is more correlated with profitability rank. I think it's one of the components there. So, by the way, actually, some people were asking, do we have a moat rating of a company? I think the moat rating is very close to our profitability rank. I did some study before on that. Usually, the companies that has a wider moat has a higher profitability rank with us also. Okay. Peter asking, I found SBC on the cash flow statement. Okay. Yeah. And Brian, yes, asking brand X. Yes, this is always recorded and they're available on YouTube, on GuruFocus YouTube channel shortly after we finish this. Okay. Peter again asking, when go to screeners tab on the top, there's a screen says CEO buying buys after price drop 20%. Okay, let me go to that screen. CEO buys after price drop 20%. Okay, let me go there. Okay, just one. Okay, there's just one company here. It's Therapeutics. Seems like it's a pharmaceutical company. Yeah, the CEO after CEO bought, it dropped 20%. I don't see that land plus. If I remove this, yeah, there are three companies. Okay, I think you said this 9 new. Yeah, we need to check this. Why I display this 9 new, but it's not there. Maybe related to some time settings. Insider here, okay, it says 1 month. If I have it from maybe it's related to this time setting, time setting here. So if I just says, okay, from beginning of the year, then you'll find these companies, they've done poorly after CEO bought. That's a place to start. Okay, trying hard. How can company have GF score, GF value rank of 10 out of 10, but have a value rank of fairly GF value rank of GF value rank 10 out of 10, but also have a GF value rank of fair value? Okay, yeah, that's a good question. Trying hard. We did lots of study. We found that if in the case of GF value, okay, basically we're talking about this chart, this GF value chart. We found that when the stock price is much lower than the GF value line, it's more undervalued. And when it's closer to a GF value line, it's more fair value. But we found that it's not the case that when the more undervalued the stock is, the better performance it will be. Actually, one of our users, his Bruce, I think Bruce Fleet, he sent me email over the weekend. He said that he did a similar study. He found that the stocks that are modestly undervalued did better. The stock will do better if they're modestly undervalued than those that are much more undervalued here. So that's actually, we did similar study. We found the same thing. Actually, when we developed this GF value idea, it was linked here. Actually, linked. If you see a question mark here, we published this study here, and with detailed explanations. We found we were studying backtesting the effects of different parameters. In the case of, for instance, in the case of financial strength, we found that financial strength doesn't matter that much as long as it's good to a certain point. But the profitability rank, always the higher the better. The higher the profitability rank is, the better it is. In terms of valuation, we found that the deepest undervalued stock actually does not perform well over time. The ones that perform the best are the ones that are modestly undervalued. For instance, in this here, this green line, they're not, this green line here, the thick green line here, it's not most undervalued stocks. They're actually more modestly undervalued, but they do better over time. Statistically, they do better. That's why we rank them as 10. So we don't rank the most undervalued stock as GF value of 10. We rank the ones which are proved to be better performing. They're usually modestly undervalued. We rank those as 10. That's why you observed the situation you're observing. But that's a very good question, trying hard. That's really good question. Okay. I hope that answers your question. Okay, North is asking, what's the GF margin of safety based on? I think when you talk about margin of safety, you are probably talking about the DCF model here. The DCF model, the margin of safety, it's based on GF model, DCF model here. So we have, in case of NVIDIA, we have a margin of safety of negative 59.77%. Yeah, with DCF model, you always need to be careful with parameters you set, because the change of parameter can easily change everything, valuation, the interest rate, the discount rate, the future growth rate. Currently, we're using, for instance, future growth rate of 20% for NVIDIA for next 10 years, and 4% for after 10 years. You can see that it has a negative margin of safety of almost 60%. If we change this growth rate to 25% for next 10 years, the margin of safety changed dramatically. So with DCF model, you always need to look at the parameters you use. There's lots of things you can change here, which will change the valuation dramatically. And DCF model also is quite limited. You need to be aware. I think we said something here. Yeah, DCF model, it only works well for the companies that has more predictable earnings and predictable cash flow for the future. So when you use DCF model, you always, please always keep that in mind. Okay, Tian was talking about the stock 4318. let me go there. It's okay. So 4318 is a Japanese company, I think. Yeah, it's modestly very under. Is it this one? 4318. Seems like that's the only one we have. Yeah, modestly fair. It's a fair value. Okay. The Honor is asking, how do I create my own comparison line chart and save it? All the charts can be done in the interactive charts. I'm not sure comparison you're probably talking about here. Compare, but you can always add stocks to compare here. You can add other companies here. You can add another company here. And choose different lines, different time periods, and you can zoom in. Recently, we added a tool. You can zoom in here, just select, highlight those, and release it. It will zoom in. Of course, you can go back to 10 years, and you can create different series, add different series here. GF value, you can add different series here. Once you add all this, you can save as a template. Can here, there's a template save here. Can save it as a template, save current setting as template. Just save it, give it a name, and also you can give it a name as save template. Give it a name, you can save it. Okay, it's saved. So next time you can come in here and load from these templates here. Okay, that's different templates. I have choose. Okay, my PS value I've done over the years, and if I just choose any one of them, let's see how it goes. Okay, that's different templates. If I just do. Okay, yeah. So the templates appears. If I remove the stock, remove one stock so that it looks better. So you can see that that's a template I created before. You can bring up in one click. You can bring up easily in one click. So that's a way of doing it. You can save it as templates. I hope that answer your questions here. Any questions? If you have questions, feel free to write in the type in the chat box, and I will definitely answer your questions. Okay, David O'Connor is asking, SIRI, the company that lots of good and bad. Okay, let's see. SIRI. Okay, SIRIS. Okay, we know what it does. And yeah, it's a possible value trap. I think twice the stock has been doing really poorly. And only this year it's down 57%. For this kind of company, I don't even look further. I would just stay away from it. And the market may be wrong, but lots of time market is right. But it's just looks, the stock looks horrible. Let's see. Okay, we actually give it a pretty good profitability rank, but financial strength is bad. I mean, the company has lots of debt. Valuation is bad, although it looks undervalued, but it's too much undervalued. The growth is so-so. Yeah, the company, I think the problem, we look at this chart. The company revenue is flat, almost flat last few years. The earning has been flat, not very predictable. It has so much debt. I think that's a big problem. It has so much debt, and the cash is not that much. So that's why we give it a financial strength rank of 3. And I mentioned that financial strength is not that critical as long as it's good enough, but 3 is not good enough. 3, it needs to be at least a 5 or 6 and above. So the financial strength is poorly. So we also, the ultimate Z-score showing that the company is in distress. So the financial strength of the company distress means it has so much debt. And also INTC score suggesting that it has higher chance of bankruptcy even. Yeah, Berkshire bought 30%. I don't know. Let's check. I don't know if Berkshire bought or not. And yeah, okay. Berkshire bought some. Yes, Warren Buffett bought some. It's under Warren Buffett, but 13 million shares. 13 million shares. So it's really not much money for Berkshire Hathaway. And let's look at the financials. The company has so much debt that definitely worries me. And let's look at the cash flow. Cash flow. When there's so much debt, you need to look at the cash flow. Okay. The cash flow from operations. Okay. Last 12 months about 1.8 billion. The cash flow from investing. Okay, this much. Cash flow from financing. Okay, pays 1 billion of debt and issue another billion of debt, 1.6 billion of debt, paid about 2 billion of debt, and then still pays dividends. That's surprising. That's really surprising. How can the company still pay dividend in this kind of case? And capital expenditure, capex 650 million. Okay, we show some free cash flow. I think it's because okay, show some free cash flow. But the debt is really the company. Okay, that does some shows free cash flow, good free cash flow. That's actually a good thing, and that's probably why the company can still operate. But their balance sheet does worry me so much. The balance sheet worries me so much, and I wouldn't invest in this kind of company. It doesn't have lots of cash, and it has so much debt. It has so much debt, long-term debt. Okay, so much debt, and I will stay away from it, no matter how undervalued it is, or even Warren Buffett buys it. I would stay away from it. Okay, let me tell you how is talking about 3771. Let's see, 3771 is Japanese company called the System Research. Okay, we said it's fair valued. Okay, profitability rank is good, GF score is good, financial strength is good, momentum is good, valuation is fair, growth is good. I think this company looks good. I don't know what it does, but let's take a look. Software application service provider. Okay. Business including SI service, operations, outsourcing business, web-related business, software development work. Seems like it's a software outsourcing company in Japan. Yeah, but the parameters look good. I don't know if they have any competitive advantage or their competitions, but at least from the surface, it looks good. It certainly deserves further study. A company revenue growing and has lots of cash. So at least with this kind of investment, I wouldn't worry too much. And now, not like Sarah's. Oh, I cannot sleep if I own those kind of company. It just have so much debt. But with this one, I think I will sleep well. This year it's down some. Last 3 years up 41%. Last 5 year, 58%. Yeah, it seems like it does have pretty good indicators on the surface, everything. Okay, let me look further. Ralph K is asking, from long-term investing experience, what do you think of current market, U.S. election and Middle East, Iran, Ukraine war, bad warring? Oh, that's macroeconomic questions. I think the current market is overvalued, as I mentioned at the beginning. It's overvalued, and the future return will be low. The good thing is that the Fed is lowering interest rate, so that's a good part. But if you look at the economy, I think the economy is okay, it's fine, and I just don't see lots of risks with a recession. The big companies, big corporations are all in great financial condition, so we wouldn't see a large bankruptcy like we did in year 2001 during the tech bubble burst. I don't think that will happen. So even if there is a correction or something, I don't think it will go down a lot. I think maybe 10%, 15%, that's the maximum it will go down, I think. I don't know. Of course, I just, but I don't see a risk or a huge market risk here. Because interest rate is going down, the economy seems to be fine. In terms of Israel-Iran war, Ukraine war, I don't think they affect that much. They do affect certain sectors like energy, oil prices, but I don't think they have big impact on the U.S. The election. Election this year is a very special situation. Also, I don't know. I don't. Again, I don't think it has huge impact. I think the market will still just follow the valuation and the Fed. Those are the two important ones. And economy. I think those are the most important factors. Okay, Jonathan is saying someone has done 260% return over the last 2 years, but you've just done 30%. His return 10%, 10 times here. Yeah. I think with 260%, I'm not sure if he is leveraged or not. If he's not leveraged and achieved 260%, he must be very lucky. If he's leveraged up and achieved higher returns, that's risky. That's really just extremely lucky and risky. And if you just done 30% over the last 2 years, that's low because SP 500 gained. Let's see, SP 500 ETF, SPY. Let's see how much again. I think it gained around 50% last 2 years. This year it gained already 20%. Last year it gained 20%. So last 1 year is okay. Last 1 year 33%. Last 12 months 33%. So you need to be better than that. If we're talking about 2 years, it's from here. So it's actually more than 50%, around 50% from the bottom. So you want to be close to that. Otherwise, probably you need to work harder, and maybe you should just invest in certain ETFs instead of doing everything yourself. Okay, is it Ralph is asking, Warren Buffett has $350 billion cash. Is it wise to put new money now or wait? It's a hard question. I think I rather put money in the market instead of put outside. Over 20-some years of investing, I found the biggest mistake I made is staying out of the market. It's not fully invested. That's the biggest mistake I made. Not picking stocks. Picking stocks, I made. I don't make lots of mistakes with picking stocks. I do make some mistakes, but not huge mistakes. Okay, Brad is saying Chinese stock have rallied. Yes, yeah, Chinese stock has been going crazy last few days. Okay, top of FUTU holdings. Yeah, the Chinese stock. This is traded on Nasdaq, and actually, if you look at the chart, for a long time, it does nothing. Then suddenly, last few days, it went up, doubled. It's related to Chinese policy, and I don't know. Although I'm from China, but I never understand the Communist Party, and I don't like them. But they can do lots of strange things. They're manipulating the market. I don't know how long they will do it, but I think lots of people will get burned. I think lots of people will get burned again by that. Okay. Jay Longdale saying that Berkshire bought Ceres as an upcharge. Okay. Yeah, okay, as an upcharge. So bought before the merger, before the merger as an upcharge, and then they got it. Okay, I understand that. I didn't know that. So it's not really bought the stock directly. Okay. AJ is asking, can we compare individual company ratios such a P to historical average for the industry, or graph to find the best in the industry? That's a good question. Let's go there. Let's look at the historical PE ratio first. Okay, if I come to the Interact chart, NVIDIA, I look at the historical PE ratio. If I remove this price line. And now this is NVIDIA's historical P ratio. Okay, I need to remove this first slide. We got a request to compare with industry average. I think we added, yeah, industry data. Yeah, you can add different industries because NVIDIA is in the semiconductor industry, so we can just add semiconductor P ratio here, semiconductor industry P ratio. For the industry P ratio, we don't have daily data. We only have quarterly data. So that's why you kind of seeing some dots here. This is the industry P ratio for semiconductor company. It's under industry data here. You can also look at the PS ratio, price to sales ratio. This is a new feature we added, but I didn't explain a lot. If you look at the PS ratio, price to sales ratio, NVIDIA versus the industry. Okay, NVIDIA is traded at a much higher PS ratio compared with the entire industry. Yeah, thank you for asking this. Ralph again asking about 35 trillion of debt. That's something I actually makes me worry so much. So much debt, national debt with the U.S. And none of the candidates are talking about. None of the parties is talking about this. That's the biggest problem. Actually, biggest problem the U.S. will face in the next 10 years. I think that's a biggest problem. As investors, what can we do? I think if the government has so much debt, and the only way to solve the problem, and they have so much deficit at the same time, so the debt will only increase. I think the only way they solve this is to do it through inflation. So inflation the debt out, just inflate. The GDP number will increase much faster due to inflation, and then the debt become a relatively smaller problem. So as individual investors, I think you should. That's what I tell myself. I own high quality assets, and that's the only way. There's no other way. Own high quality assets, maybe even gold. Consider some gold. Gold has been doing really well this year, and I personally bought some gold also this year. Yeah, that's big problem we're facing as a nation. That really worries. Okay, trying hard, asking severe warnings, medium warning, good signs. Have we done systematic backtesting on that? No, we didn't. Those are just based on some common sense. Some signs are good, like too much debt is certainly not a good sign. The high end, very high end valuation is a warning sign, something we know. And yeah, it's based on common sense. It's not based on backtesting. Okay, is that graph track historical EV to EV to EBIT year to date? Yeah. Yeah, the chart EV to EBIT, I think it's here. EV to EBIT, they're all here valuation. You just click on that, you'll see the chart. You'll see, of course, we have others there, which is mixing with this purple color EV to EBIT. If you want to see year over year growth, you come to the 30-year financial page. It's also here. It's also in, let's say, EV to EBIT is here, yeah. And if you just click on this, it shows you the chart. Okay, we don't have year over year here. Yeah, we don't have a year, just show you the chart. But you can observe that. Also, you can always download the lines of data to Excel with GuruFocus Excel add-in, then calculate yourself. Our time is running out. Thank you all for the questions. It's always a pleasure to answer the questions from our users. Again, feel free to contact us if you have more questions. We have different ways of support. We have a chat support here. You can also create a support ticket. You can also schedule a one-on-one meeting with us. You can always schedule a one-on-one meeting here with us, and we will answer your questions just on one-on-one basis. We'll spend 30 minutes with you and answer your questions. Yeah. Having the best customer service is our goal. We will always do our best to serve you. And this year is our 20th year in business. I'm very proud of it. Very few companies can make 20 years. I'm very proud of it. But we do have lots of challenges. We still have lots of work to do. And feel free to contact us, feel free to give us suggestions, and I'll talk to you again next month for November's meeting. November's meeting will be on November 6th, Wednesday, 1 p.m. Thank you all very much.